Good afternoon. We're live. Hi, everybody. Sound check. Everybody out there, if you can hear me, give a nice hello. A bunch of usuals and hopefully a bunch of newer people as well who are usually afraid to talk. Don't be afraid to speak up tonight. Want this to become an open session, and it is specifically kind of geared toward the newer person, like a lot of these are. Like I say about all of these, the events that I do, these free stuff events, on one hand, they are small topic, but sometimes advanced topics are actually supplemental material for the seminar program people, and for a lot of people, they're more introductory type topics to get you kind of, looking in the right direction if you've not had any real education. A lot of times they're there to tell you kind of what not to do, what you should be looking at, mistakes people make all the time. I always want to, well, the slide's going to say it in a minute here, but I always want to remind you, this is not like a substitute for getting educated. It's in addition to, or is your warm up to it. Because, obviously just going through the class one time is like 24 hours, 25 hours, and you can't begin to duplicate that even if I wanted to in a little situation like this. I imagine if you listened to everything on the free stuff page and attended every event, I've been doing this for almost 6 years, I guess you'd maybe get a quarter of the material you'd want, but I mean, So these are fun events in my mind and often used to bring out a lot of great concepts, and that's what we want to do today. This is a technical analysis quiz, I called it. The last time I did something similar to this, everybody really loved it. Last time, though, it was not so much a quiz about charts as much as it was about how you set yourself up with your charts. I brought up a lot of points that people make, a lot of mistakes they make. That event actually, I did not post as a video replay because it was a little too confusing because you were there polling live. And it was too difficult to do. So I put the summary of it on the free stuff page still, but down in the educational articles. And I think it was called Test Your Knowledge. Because you might want to look that over if you like events like tonight. That's on the free stuff page, or so you can check that out if you want to. It's an article, not a video. Technical analysis quiz. These education events are not meant to be a substitute for your real training. They are a great supplement. They can bring out tremendous understanding about what is needed to be great at technical analysis, and also a lot of common mistakes that traders make. I bring this up because this is going to be a more educational event that may highlight some misconceptions people have that likely cost them a lot of money. The average student of technical analysis does not have enough understanding to make money as a rule. Every mistake that is eliminated brings you closer to success. I mentioned a lot of times when I'm teaching that if nothing else, if you just pick up something somewhere that you do or you learn that would eliminate 1 out of every 4 stop-outs you had. If every 4th stop-out you would have avoided because you never took it because you realized it was not a good setup, that would make a big difference for a lot of people. What about every 3rd stop-out you could have avoided? A lot of people could probably avoid every other stop-out. So a lot of these sometimes just knowing that what you're about to do is really wrong can help you sometimes. This will be a very technical session looking at chart patterns. The goal will be to show some common misconceptions traders have by not fully understanding technical analysis. Let's begin. A versus C plus. Not long ago, and this is true, it wasn't that long ago, I just casually mentioned the difference between A and C plus technical analysis. It was an impromptu comment. I was doing some event and I just kind of brought it up. It wasn't pre-planned, it wasn't on the slide, or at least the first time I ever said it wasn't on a slide. I don't remember getting such positive feedback and questions. A lot of people, just asking about it, kind of hit home with a lot of people that maybe that's the issue. They have a C understanding of charts, and that's why a lot of things don't make sense to them. So I'm going to give you some more examples of A versus C plus technical analysis. I'll show you a couple of examples and show what the difference is, but please understand. Before I finish, I was going to do several, and I decided rather than crank through a few quickly, I'm going to just do a couple, and I really want to ask you a lot of questions about them. So we may even finish early tonight, which would be a rare event. I'm never over more than a couple minutes. I'm usually right on time at an hour, which is usually pretty lucky. We may be early tonight unless you guys have a lot of questions. We'll see how it goes. I also was going to set up an official poll to do this so you could be anonymous. I didn't do that. I could have. I was a little hesitant because sometimes the polling thing is hard to do the video replay. That was a problem last time. So I'm just going to ask you to type into the room. Again, nobody knows who you are. It doesn't matter if you're right or wrong. I'm not here to, ridicule or make fun of any answers. So feel free to, to type later if you want to answer some of the questions I'm going to ask you. Some of these topics require a full in-depth underlying understanding. I read that twice, and I think the sentence is okay. It sounds a little awkward to me. Some of these topics require a full in-depth underlying understanding. So you need to understand a lot leading up to the topic I'm bringing up, even though it seems like a simple topic. So it may not be obvious to you why I'm giving you the answer I am, but I think you'll get the idea. For some of these, I think you will clearly understand kind of the topic I'm on, what's right, what's wrong. It may not answer the question to you, though, how do you read the chart? Because that's what I mean. That's a bigger underlying topic, obviously. I'll poll the room for answers just for fun. Let's begin. Are we ready to begin? I want to first of all talk about, there are so many terms, and this is one of my little peeves, I guess, because I mentioned this before. There's so many terms that I'm going to call them wannabe traders, and don't be insulted. I don't mean anyone in particular, but the people out there, just out there, they trade a while and they make a little money, and then they lose a bunch and they quit. And the wannabes that are just kind of reading the internet and following some videos and think they can duplicate it. A lot of them really get hung up on these fancy terms. The doji, and I love people that trade intraday using the VIX. It's silly. There's just so many people that get hung up on it. Even volume weighted price, for all the stuff that people use. What I always say to them is, just prove to me it works. I am totally for using anything that helps me make money, whatever that is. But there's so many things out there that people just use examples and say, oh, look how this worked on these 5 trades. And I use their criteria and say, okay, here's a random sample of 20 trades. It doesn't work. But people just get hung up on it because it works on a few trades. So it's just that, it's like a broken clock being right twice a day. It's one of those things that always kind of gets me. So let's talk about the famous, or I really should have put infamous, doji. A quick review. If you're new, a doji is the name given to a certain candlestick pattern. Actually, a certain candlestick, not a pattern. That's really not right. Candlesticks are the only way to view a price chart. That's the only way I do. And that's your simple, I think, if you're here, you probably know a candlestick, open, high, low, close, red, green bars, etc. So that's what we're going to be talking about here. And for the doji, here's what a doji is. Now, so we're going to go through this first one here, the famous doji. That's the first topic. And then there's going to be 1, 2, 3, 4, 5. And number 1 for each of these 2 I'm going to do is, what is it in English? What is a doji? Just tell me the words. Well, the definition for doji is, it's a Japanese, and that's the actual Japanese writing for it. It means the same thing, a reference to a rarity in having the open and close price for a security be exactly the same. Now, open and close for what period of time? Well, it doesn't matter. In candlestick charting analysis, every candle represents a period of time, whatever chart you have. It could be a day, could be a minute, could be an hour, could be a week, could be a month, doesn't really matter. But it opens and closes at the same exact price. And since, if you go back to that last slide, since the difference between open and close is painted red or green, if it opens below where it closes, it's painted green. If it closes below where it opens, it's painted red. If it opens at the same spot, there's no color left. It's just that you're not painting it any color because it's exactly the same. So that's what a doji is, where you have an open and close being the same. The typical doji that we talk about is like that, where it's relatively equal, high and low, above and below like this. You can get into other fancy names when there's a bigger tail on the top or a bigger tail on the bottom, et cetera, et cetera. So let's come to question number 1 here. Question number 1. The doji specifically is defined. And by the way, this is a definition from the internet somewhere, from one of those wonderful trading sites that will teach you how to trade if you read it long enough. Same exact price for open and close. So let me ask you something. What if the close was 1 penny above the open, giving us a 1 cent green stripe in there? Would that change the implication of a doji, whatever that is? Would that change it in your mind, yes or no? Steve says no. Harold, no, 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 no. Yeah, keep the answer. No, no, no. Okay, so everybody says no. All right. Well, let's say this is a $1 bar, $1 from there to there. So you said 2. What if the open to close difference was 50 cents? Would you still consider that to have the implications of a doji? Yes or no? So, and I asked that question backwards. I apologize. Well, let's just pretend we only know this 1 bar is $1. And obviously, if I kept asking you, what if it was 2 cents, 5 cents, 10 cents, right? At some point, you guys would all give me a different answer, right? If it's 5 cents, somebody would say, well, it's still a doji, 5 cents of $1, who cares? At some point, somebody would say 10, 15 cents, oh, now that's pretty green, right? So the first issue is, what is a doji? We don't even really know. It's a bar. You would have to say realistically, there's a very, very small distance between the open and close, right? Okay. So there's issue number one, and that's that question I just asked there. So here comes our first question. Here comes our first question. When you see a doji on the chart, the forward-looking implications are, not what does it mean in the past, it's closed, but what are the forward-looking implications? And whenever you want to, type your answer here, A, B, C, D. A sign of indecision, meaning neither bulls nor bears can successfully take over. B, a likely reversal of the prior pattern is likely. Little typo there. It is always a bearish pattern. Both A and B above, and A, of course, is a sign of indecision. B was likely reversal. And then E, none of the above are accurate. What do you feel? So we have, I'm not going to say your names for the video, but we have an A, an E, an A, D, D, E, A, C, A. Okay, E, E. Interesting. So to be honest with you, that's a lot more variety than I thought we would have. Let me preface this comment with one other comment first, and that is that as I say these things, sometimes there is some personal bias involved. In other words, I may look at things a certain way. There's times where I would look at things and say, no, this is black and white, that's right, that's wrong, there's nothing to talk about. There's sometimes where I'd say, well, this is the way I look at it, but I see how you could see it slightly different, right? This is a black and white issue to me. There's nothing to talk about here, and I'll prove to you why in a second. Before I give you the answer to this, and yes, there is an answer, let me do the second question as well. The second question is, now maybe some of you, when you see the second question, maybe you want to go back and change your answer to the first question. Don't worry about it. But what do you see? What do you have? A green bar, green bar, green bar, then a doji. 3 green bars. When you see a doji after 3 green bars, it means that a decrease in price is likely. True or false? You can put A or B. A true, B false. What do you think about that? So we have B, A, B, A, B, A, B, B, A, B. Can't vote twice. A, B, almost perfectly split down the row. They're amazing. Okay, so here are my answers. Going back to this one here, none of the above are correct. Obviously it means that it opened, they'll say it's a daily bar. It opened here in the morning. At some point we traded way lower, sometime we traded way higher, and it closed right here. Yeah, the last closing transaction is, one person, one seller, but that's still where we landed. I mean, in order to land at the closing price, you can't all of a sudden jump 50 cents the last second, right? I mean, you worked your way down there through theoretically thousands of people to get to that price. So it is, it is what it is. Back to here, the answer here is E. None of these are accurate. And the answer here is B, false. A decrease is not likely. And let me not just give you my answer and say, live with it. Let me explain to you why. And when I explain to you why, if you have a question, let me know. But when I explain why, I think it becomes difficult to argue with the logic. Here's your green bar doji, right? So that's what we want to look at, right? Before we look at that, I'd like you to take a look at another chart pattern for me, all right? Here's a chart pattern being drawn on the right side of the screen. That pattern that you see, would you call that bullish or bearish? And don't put a B because that's not going to be helpful. B-U-B-E, bull, bear, bullish or bearish? Not a trick question, nothing, that's it, just in a vacuum. Right, it's bullish. I agree with that. We all agree with that, okay? Now here's what's going to blow your mind. You ready? I'm using 2 different time frames here, and for this example, it could be any 2 time frames, but the 2 time frames I'm going to use here are a 5-minute chart and a 1-minute chart. So here's the pattern we were discussing, right? Green bar, doji, right? If this were a 5-minute chart and this were a 1-minute chart, I want you to see that this lines up. In other words, 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, that would form that 5-minute candle. Is that true, everybody? Okay. And then we open right there, 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. That would form that candle right there, correct? Card number 2, right? Next bar, 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. So we went down, we went up, and we closed here. That would have formed the doji, right? So let me ask you again, is this pattern necessarily bearish in any way, shape, form whatsoever. No, it's not. It's not at all. As a matter of fact, what you're saying is you're actually fighting the number one rule in trading. That is one of those Mickey Mouse rules you learn, but happens to be true, and that is the trend is your friend. Don't fight the trend. Don't fight the trend. Blah blah blah. Right? If you have two green bars, you're in an uptrend, and you never assume an uptrend is going to break because of some Mickey Mouse concept called a doji that's there. See, a doji forms. Somebody tell me why is it that we ended up with a doji here? Can somebody give me that advanced answer? A seminar person would for sure. But what made that doji form like that? It has nothing to do with equilibrium. It has nothing to do with balance. It has nothing to do with pausing. It has nothing to do with the patterns ending. It has nothing to do with all the crap that you read. And it is mostly all crap you read on the internet, right? I mean, I'm going to tell you later. Thank you, David. Exactly. Seminar student. The clock ticks 12. In other words, guys, here's what happened. We're just trading. We're going along trading, right? Da 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 da. Boom. Somebody decides to start a new bar. Who said we're going to start a new bar? I don't know. Right? For some reason, the Earth goes around the sun once every 24 hours, and for some reason, we decided to take that time around the sun and divide it into 24 chunks of time. I don't know why. I don't know who did that. Well, most days it does, Eric. And then we take that hour. Did I say that wrong? I'm sorry. The Earth spins on its axis. Yeah, we'd be flying off in outer space. The Earth spins around one rotation every 24 hours. I'm sorry. And then every one of those 24 hours, we divide it into, you ready for this? Wait for it, 60 minutes. Why do we do that? I don't know. I think somebody way back in the old days was pretty drunk on some kind of, grain they were drinking, whatever. And then they took the hour and they divided that into 60 minutes, right? And all of a sudden we decide that we as human beings, we want to start a new bar at 10:45, right? Is there any relevance to that, anybody? See, all that happens is we're just trading. People are trading, blah, 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 blah. And what we're doing, guys, is we're just taking pictures, right? We snap a picture. And we're going along and boom, here we snap a picture. There's the end of a bar. Here's another picture. We snap another picture. And I always joke around, it's just like you're at a dinner party or something and somebody takes your picture on their cell phone and you look at it and you got like a piece of corn stuck in your teeth. And you go, wait a minute, that's not me. That's not what I look like. But that's the picture that got taken. And that's what's happening here, right? Here's this beautiful chart pattern, bullish as can be. It wants to show off and say, oh, I'm really bullish. And somebody snapped a picture right there. And look what happened. I got corn stuck in my teeth. I'm a doji. People don't like dojis. People think dojis are bearish if we're in an uptrend. Now I have this bad reputation. But what's really happening? Nothing. What if we would have snapped that picture 1 minute, 2 minutes later? What if we were on a 4-minute time frame or a 7-minute time instead of a 5-minute? Does any of that matter to trading, folks? Does it matter if you're looking at a 4-minute chart, a 6-minute chart, an 8-minute chart, a 180 or an 18-hour chart, a 36-hour chart, a 1-day chart? Does any of that matter? I mean, traders are trading, they're exchanging shares. Nobody looks at the clock and goes, oh, wait a minute, I'm not going to sell until 10:46 because I don't want this in the 10:45 bar. Do you understand what I'm saying? So many concepts in trading revolve around that picture that you take without looking at the whole picture. This is looking at the whole picture. Do you understand why now the answer to this question is false? And if the answer to that question is false, this has to be E, because that's even more extreme, right? You can't just say that nobody can take over. The bulls are in charge. Every rally has pullbacks. If you take a picture during a pullback, guess what happens, right? Does everybody see the point, number one? Because we did have a wide variety of answers there, which I was happy to see, I guess, because we're covering something here. And do you have any questions about it, or arguments, or counter rebuttals, or whatever? I'd be glad to take any. Somebody had a question when I was just starting my answer, and I didn't answer it. Something about number one or something. If you want to retype that, feel free, or maybe I answered it while I was talking there. Oh, and here's and number 4, explanation. Number 5, here's an example while you're typing it. Here's an example. This is cost, just last week. Cost. 2 big green bars, a doji, and boom, we just went flying higher. Right? I still think A is correct in that time frame. Well, yeah, Roger, I mean, you have a point in that the way it's a matter of semantics here, maybe, right? But here's the key word that I left in here, and this is a definition from the internet, by the way. Neither bulls nor bears can successfully take over. That's why I think that's false. I agree it's well, I can't even say I agree it's indecision. I don't even agree with that. You know, if you just ask for any trader of definition of a doji, you'd probably hear indecision, right? I think that's garbage. I'm going to disagree with that. I think that's totally wrong because it's not indecision, right? There's no indecision on this chart I just showed you, right, Roger? There's no indecision here. Bulls are in charge, bulls are in charge, bulls are in charge. There's nothing to discuss, right? Just because there's a pullback in an uptrend, that doesn't mean that they've lost control or there's indecision, right? So that's my stance on it, right? Well, you can't predict the next bar, Peter, but because you are in a trend that is nothing but bullish, right? Well, look, and here we're going to get into this thing about what it looks like. You're talking past tense. All these, I'm going to read you some definitions at the end that are hysterical, but all these past tense comments are worthless. We need to look at a chart and say, what are we doing next with this, right? Isn't that the whole point of this, everybody? The point is to make money, right? And to make money, we want to get the highest odds of what may happen next. Now, if we don't have good odds about what's going to happen next, what do? Two choices depending on if you're trading futures or stocks. If we don't have a good idea what's going to happen next, what do? Right. Take a pass, right, Gary? Or if you're trading stocks, you look at another stock, right? Go to the next pattern, right? So the whole point is what's going to happen next. And what I'm trying to get is that, well, yes, but that's not what's showing here. A pause that refreshes is not what's showing here. All I'm showing is a single doji, which is not a pause that refreshes any time frame. The point is simply this, is that if you read, and I'm going to encourage you to go read some definitions of the internet later, I mean, virtually every definition would tell you that this is a reversal pattern, and it is not. That is just dead wrong, right? That is just dead wrong. Peter, I'm not even saying this would be a long. What I'm saying is that you have to look at the totality of evidence. You have to look at 4 time frames. You have to make your decision based on an understanding of the chart, all 4 time frames, and not one time frame with a cookie cutter concept like, oh, a doji is a reversal. That is the point I'm making. Do you see that? I can't tell you where the stop is because I can't tell you I would ever take that long, right? I'd have to see something else. So that is the point here, is that this in no way should be looked at bearishly in a vacuum. Now, you put that together with 6 other factors, and then I would consider it short, right? But we'd have to have all those other factors working here, including the fact that what would the biggest factor be to me that I would have to see? If I said I needed 5 or 6 other factors for me to short this pattern, what would be the number one thing that would have to be there? Right, Gary, exactly. That this is a little micro uptrend inside of a bigger picture downtrend, right? That's number one. Yeah, exactly. And that's just a simple concept of just even one higher time frame. You got to look at 4 time frames all the time. I want to make another point here too. So here I showed you cost, right? All right. And let me state for you what some of you want to say. Some of you better traders will look at this chart, right? And just give me a true that I'm saying what you would say. You'd say, okay, Paul, yeah, you're right that you said 2 green bars doji doesn't mean it's lower, but that particular chart, well, let me stop. Let me ask you, why did this chart go higher if a doji should be a reversal pattern? We actually have 3 bars up. I mean, 2 of them are green, 1 of them is red, but there's 3 bullish bars. No, I'm sorry, 2 bullish bars, and then a doji. And I say to you, okay, a doji is not a reversal, and you say, and you're going to say, well, Paul, yeah, okay, that chart you picked, you're cheating because that chart is what? What about this chart would make you say it's higher? Paul, you're cheating. You picked a doji after 2 green bars, sure, but look at that chart. What would you say about this, you good traders? Where you would say, well, yeah, it's a doji, but come on. Well, a wide range bar that looks like it's more of a breakout bar, right, Dave, than an ending bar, right, igniting a new move, right? Yeah, that the doji is actually forming kind of a 1, 2, 3 setup. And boy, the most obvious one you're all ignoring. What's the most obvious one? What's the biggest thing on this chart that makes you go, wow, we're going higher? Well, this, right? There is your downtrending. I mean, I would not short this pattern, but here theoretically is your downtrending pivot that you just broke, right? And obviously it looked very bullish before that for a whole lot of reasons, right? So we're breaking that downtrend. So my point here is this, is that if you look at me and say, well, Paul, yeah, you picked a chart that has A, B, C, D, E, so I wouldn't look at the doji. That's exactly my point. You're making my point for me, which is, well, why are you looking? What does it matter that that's a doji? Do you see my point, everybody? It simply doesn't matter. Everything else you just said to me is what matters, or I helped you say it because you can't type as fast. But all those things you recognize about the charts that said, hey, that's going higher, that's what matters, right? Would it matter to you if that were a doji or for a little tiny red bar, a little tiny green bar? None of that would matter. So lose the cookie cutter shortcut terms that are for the Mickey Mouse traders who will never be able to read a chart properly. Seminar people, in my discussing and teaching, have I ever used the word doji in a educational sense? I mean, I know when we talk about candlesticks, I tell you what it is. But after that, I've never used the term because it's a meaningless term. But yet, if you go to Technical Analysis 101 and look it up, you're going to see doji, 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 magical pattern, da-da-da. I'll show you some at the end. Okay, let's go on to the next one. And this next one is maybe a little different. Now, first of all, I want you to read this. We're going to talk about a topping tail now. What is it in English? Now, I thought the best thing I'd do for a topping tail would go to the internet and get their definition, right? A topping tail candle pattern deserves its own page and mention. You getting these words? Because of the immense predictive value. Holy, I almost swore there by mistake. Holy cow. And if I was a new trader reading this, I'd be like, turn this page down on the book or bookmark this on the internet. There's its own page and attention because of its immense predictive value. Wow. Huh? And that this pattern gives us. Whenever you see a topping tail candle appear, listen to the language. Whenever you see a topping candle appear, it often there's a contradiction right there, right? It often points to a reversal. I think I'll tell you in a minute. This is off of one of the top internet sites. This is I do have it. It's right here. I wrote it down because I knew you'd want to know. It is D like the letter D, stockmarket.com. dstockmarket.com. But you might have fun. Go to Investopedia, go to investor.com. It's all the same crap. Yeah. And then let's get and listen to this language. Isn't this language great? I love this the use of English here. Whenever, right? That means all the time. Whenever you see a topping tail, it often points to reversal. Oftentimes this candle pattern. Now listen. Oftentimes this candle pattern marks the top for the stock, right? There's another definition. I lost it, but it said that a bottoming tail. This is honest to God. This is what it said. Listen to this. When you see a bottoming tail at the low of a candlestick formation, it indicates a reversal. So in other words, once you've fallen and once you've rallied, if that's a bottoming tail and you're way up here, it means that that's the bottom. Genius, yes. So if you've seen a bottom, it's a bottom. Okay. Yeah, it often does, but sometimes it doesn't, or maybe can or doesn't. Anyways, and so I thought I'd put that definition there for your fun. So there's a topping tail. And all we're saying with a topping tail is it has to be at least average size bar, right? We can't have this little, 2-cent top bar with a 1-cent tail or something. It's got to be at least an average size bar, and more than half of it's a tail. That's just the general, definition that I would use for it. But what does this mean? This is a quote from a highly acclaimed market site. Memorize it. Got that? You need to take a picture of the slide so you got that definition down? Because once you know that definition, you will be able to trade like a genius. All right. But seriously, back to a topping tail, because a topping tail really is something, right? It is something. So let's take a look. When you see a topping tail on a chart, the forward-looking implications are A, and whenever you're ready, just go ahead and type. I'm going to put a number 1 here. A reversal is very likely, meaning reverse to the downside, because we were a green bar, so a reversal is very likely. B, a reversal is more likely than not. So just a little softer language, saying it's still likely but not absolute. C, a continuation to the upside is more likely than the reversal to the downside, and nothing all by itself. Yeah, I'm actually going to say 2 answers are okay here because it really depends on how you read the English language. Nothing by itself is fine. Yeah, exactly, Eric. And I think C is an acceptable answer. Now, it's a little hard. It depends how much you want to say in a vacuum. But looking at this chart, we have a bullish move up and a 50% pullback. Just in a vacuum, I say that's more bullish than bearish, and that's the number C says. So, I think C is okay, but I have nothing wrong with D because I wouldn't take any kind of decision based on that, but theoretically C is okay, D is okay. A and B are just completely wrong, and most of you know that. But here again comes the maybe different type of setup. What if we have a topping tail after 3 green bars? And here's the true false again. When you see a oh, that should be topping tail. I didn't change it. I copied the wording. Sorry. You see a topping tail. Oops. When you see a topping tail after 3 green bars, it means that a decrease in price is likely. Go ahead. True or false? A or B? A is true. B is false. So now we have, it's on the 4th green bar. Now we have a topping tail forming. We have A, B, B, A for true, B, B, A, B. Okay. More B's than A's, a little pepper through that. So let's take a look, and let's take a look at this again the same way, and then let me clarify it when I'm done here a little bit. Here's our pattern, right? Ignore that pattern for a minute. I'm going to just kind of give you the same thing. It's not going to be any rocket science here, right? What we did before is, once again, applies. Is there anything bearish about that pattern to the right, everybody? I'll stick with that question. Is there anything bearish about the pattern on the right? No, absolutely not, right? Absolutely no indication. It's stalling, accelerating, faltering, just a perfect little, I know it's a hand-drawn chart, but just a perfectly drawn chart. Nobody in the world would say that's a short, and guess what? Here we are again. The chart on the left is the chart on the right. It's the same thing. Again, we just took that picture right there, bam. We just decided there's 5 minutes, boom, take a picture, and we're in the middle of the pullback, right? If we would have stopped the clock here, we would have had a big green bar. As a matter of fact, for some of you, many of you know this, but if you have a green bar followed by a red bar, if you would have stopped the clock at a different time, you'd have a topping tail, right? But we come up with all these names, bearish engulfing, topping tail, all this stuff, and yet it all changes depending upon when you decide to start and stop the clock. So that's why it's so important to understand, just what you're looking at, and not to be hung up on names and cookie cutter things in one time frame, et cetera, et cetera. An example, this is Citibank, again, just last month, right? 5 green bars, count them, 1, 2, 3, 4, 5, and a gap up, and a huge topping tail, right? Got to be lower, except it's not even close. How would you know that? How would you know to be bearish or bullish on that? Anybody got an idea? Well, the gap, if anything, to me, Dave, would indicate to be bearish, and that would have been wrong, right? I mean, the gap up after 5 green bars it's not bullish anyhow. I mean, that gap is not bullish. It ended up being bullish, but I mean, the gap itself is not really the cause. It's really a non-event gap. It's a continuation gap, as it turns out to be. Yeah, the other time frames, right, dollars? Here's the hourly chart that day, right? I mean, you wouldn't short that chart, at close, let's say, right? Just because the daily bar, there's your daily bar. So this topping tail right here, just to be clear, that day right there is this day here. You wouldn't look and say, oh, we're closing with a topping tail, I'm going to short that chart, right? There's nothing about that chart that looks lower. Now, again, maybe that's opinion, personal, how you look at charts, whatever, but there's no way I could look at that and say that's a short. Maybe the next morning, and maybe I think it would come down a little bit first, but that's not a short, right? No way, no how. So why would you keep a rule in your basket of rules that says, oh, topping tails are bearish, or topping tails are bearish after 5 days up? Yet you look anywhere. I read you that definition, right? Do you want to read that definition again? Because now it's even funnier, right? Some of you were laughing at it immediately, but a topping tail candle pattern deserves its own page and mention because the immense predictive value, crap, written by I don't know who, written by an out-of-work TV actor or something. Well, we have one, $. It's part of the seminar program. A huge portion of the seminar program is dedicated just to that, because my definition of trading, technical analysis, if you will, is the language of charts. It's the watching the battle of the bears and the bulls, monitoring the battle between the bears and the bulls over the 4 pertinent time frames, and that's what so much comes down to in all of this, right? And mostly do voiceovers. So there's our example of that. Picture 1,000 words, boom. seriously, I didn't ever realize that until I did this today. Yeah, because I probably haven't looked up a definition since before I started trading with real money. I don't know. I mean, I don't remember ever doing it other than maybe for like an event like this. I remember looking at some definitions to make points, but when I really read some of these, I mean, you really should just go Google some stuff. I'm very serious, just to get it, maybe to solidify to you why so many people struggle in the market. Because you go and look at even what are considered to be the bigger name sites, Investopedia, blah blah. I don't know who the big name sites are, who's supposed to be good or bad, but and I just picked out the first ones I saw. I didn't search for these. As a matter of fact, this is a last minute slide I threw in here like at 4:30 or something. What is a topping tail? The topping tail candlestick has a short body with a long wick on the top, and it looks like a tail. Oh, that's interesting. The topping tail candlestick is a bearish candlestick pattern that occurs at the top of an uptrend. Oh, this is the Yogi Berra style of trading, isn't it? What's his expression that you only buy stocks that are going higher or something? So a topping tail occurs at the top of an uptrend. Well, geez, if I knew that, I would have been making a lot more money a long time ago. The candlestick has a long upper shadow, which means that price has made a new high but closed below its open. Wow, that's very important. How do you know if a stock is topping? A stock that is in a price uptrend will moving gradually higher. But when it's about to make a top, there will be an erratic price movement because the public will be chasing the stock. All too often, the stock will not be able to sustain a rise and closes lower, dramatically forming topping tails or shooting stars. Roger, you're going to start competing with Richard in the room. How do you know if a stock will go up the next day? This is a good one too. I didn't even look at just when I was reading, that was the next question. How do you know, how Google does it? How do you know a stock will go up? So I just had to click on this, right? Because how do you know a stock will go up the next day? After hours trading activity is a common indicator of the stock's next day open. Well, how does that help you? You can't go buy it at the close price, right? If it closed at 20, it's trading at 21, it's trading at 21, right? Again, some complete moron writes this answer as if somebody reading it thinks, oh, wow, if it's trading after market at 21, it's going to open tomorrow at 21. I'll go buy it at 20. Well, no, it's just like saying, how do you know the stock's going higher for the day? Well, at noon, if it's at 22, it's higher for the day if it opened at 20. Just complete moronic stuff. So much you read is just circular. It offers you nothing at all. But I think it's funny. Just go read some of this stuff, and it really will emphasize to you. Especially, I'm talking to some of you that are a little newer, trying to learn on your own. Which I try to encourage you to do to some extent. But you can just see how worthless some of this stuff is, and that's why I made the proclamation a couple of years ago that the free stuff page is the greatest source of free information anywhere on the internet. And after reading the crap that's out there, I have to double down on that and say it's not even a close call. Any questions? I told you I would probably finish early tonight. I wanted to leave time for some questions or anything you want to go over. But that, I believe, is the... Oh, if you liked some of this stuff that I talked about tonight, I already gave you that article, right? You have the article up there. There's an article that kind of is a test type of thing you might like if you like the stuff I did tonight. Well, thanks, Dan. I'm just trying to help. Like I said, for those of you who want to learn, if you're, I said before, there's different people out there. I'm actually in the group of people I don't like as much. I'm kind of a, want to try to learn it myself, do it yourself type of guy for the most part, but there's another breed of person out there, and I think it's only about 10% of the people. And what they do is they just focus on something, they get good at it, and they pay for everything else, right? So they go make their money, blah, 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 and whatever it is, and they pay to have everything done. If they want to go learn, they're going to retire and they want to learn the market. I had somebody, I think it was about 3 months ago, I never heard of the person. I didn't know who he was. He just signed up for the seminar program. I even had to ask him. Normally I know the name of the person because you've been around, asked questions. He said, I saw you on YouTube. You're my guy. And that was it. Boom. It was like a one-day decision, which I don't really encourage people to do, but that's the way some people are. I'm just trying to leave that avenue for you, to show you what I can. And if you're serious about learning, and you like my style, seminar program's there for you. If you want to keep going on your own, I'm always, willing to talk to people, look at your charts, whatever you want to do. The other thing then is confirming what? This is a video that I did. It was about a year ago. And I think this is a great one too. And this one is on the archive page, which means if you go to the archive page, you end up on YouTube. what you can do is, I'll look for those you want to take off. If you go to the free stuff page, I mean, actually, it's a good way to get to know the free. Go to the free stuff page, and then at the top of the events section, there's a link to go to the archive page, because this is old enough, it's no longer on the free stuff page directly. It's on the archive page. When you go to the archive page, the best way to find something is hit Control F, right? Control F, and just type in confirming, and it'll take you to the video that way. But also, while I'm waiting here, I will get you the direct link also, doing just what I said. Oh, thanks, Matt. There you go. Matt beat me to it. There you go. So there's the direct YouTube. Any questions, anybody? Quick mention for those of you, every other presentation I just mentioned this, for those of you who would like to day trade but don't have the capital, and again, I want to emphasize, you don't have the capital because it's tied up in a house and other investments, but I don't want somebody trying to day trade who doesn't have money. But if you want to have day trading capital because you need $25,000 to day trade, there's a way you can do it through prop trading. It's something that I refer you to somebody that I've been doing for years. So you just want to email me if you want that. You can start trading in a couple days, and you can start day trading with as little as $5,000, and you'd be able to purchase 10 times whatever you put up as risk capital. There's no hoops, there's no tests, there's no levels. You're just trading your own money. Okay. Dave, that's my line. You'll be amazed at how much you don't know. Prop account for good practice. Well, I wouldn't, practice. I'm not sure what you mean by practice. I mean, it is, paper trading is what you should practice on, but the prop account could be your account. I mean, the positive about a prop account is you can put up $10,000 and trade $100,000. You can put up $50,000 and trade $500,000. You can do whatever you want. The negative is that there are commissions and a fee. Now, there's commissions in the market today for some, not for others. It really depends on what you want to do. If you're not paying commissions, you're probably not getting as good a fill, so you're paying some fee somewhere. But there is a fee for the platform. So there's a little bit of an expense, but you're also getting, I don't want to say you're getting free money because it's not your money, but you have the ability to trade 10 times what you're putting up. So it's a good deal if that works for you. Okay? Yes, there's a platform fee every month. If you email me, I'll email you the basics. I don't want to waste our time discussing here. I'll email you the basics, and then you would ask me specific questions of a gentleman named Richard, who, again, I've known for years. Your money is safely kept in the U.S., and you have the account is in England, so you avoid having to take any of the tests, any of that stuff. It's a legit thing. I've referred many, many, many people there, and never an issue. Okay. Don, careful with market. Well, how do you want me to answer that, Don? You should always be careful. I've been bullish since November, and I still am. And the long-term trader is just kicking butt because it has been 100% bullish for since this year. Yeah, me 100% bullish in a still bearish, bigger picture. That's what you have to do, even long-term. If you're going to rally for 4 months, you can't sit there hitting the short sell, right? So I think we are, Don, I've even said it, if you read, even in the weekly market summary, which is just a free thing I put out to people, I said it right there that I will not be able to tell you the top of this bear market rally. Nobody on the planet will, not ahead of time. As it happens, perhaps, and there's a way that you can trade around that, which is what we're going to do in the long-term trader. But all I knew is we're heading higher, and from here forward, it's very difficult to say where we go exactly. Cost of doing business. That's right. Well, you know what, Daniel, if you don't have the cash sitting there and you want to day trade, it's a great thing. Because, I mean, if you're learning and you're just trading minimal shares, which you should do to start, you'll have a hard time even if you're making a little money covering the fee. But if you start risking $100,000, $200,000, $500,000, whatever, I mean, the fee becomes nothing, right? Thanks, Peter. I'm glad you guys like it. You can only trade in the afternoon. Yeah, I think you can learn to trade any part of the day. My favorite is the morning. I like the opening 60 to 90 minutes. That's what I focus on. That's where my specialty is. That's where I think I know all the tricks that are going on. But you can focus on any part of the day. I think you should focus on one part of the day, 2 hours every day. Thanks. $, $, $. Guidance in terms of what to do? No, no prop firm is going to give you any real training or guidance. I mean, you get that from me. There is well, here on the next slide, well, right here. I mean, there is a little deal put together if you want to take the seminar program and prop trade. So in other words, if you're fairly new and you want to get guidance, I mean, you can take the seminar program, and this actually is a little bit of a discounted price, and you get a couple of perks with it. So you can look at that slide that's up there right now, and some people have done that. So you can do that, but the prop firm will just leave you alone. They're simply going to say, here's your risk money, go trade, go crazy. If you lose too much of your risk money, they're going to cut back your buying power, right? You're not going to sit there with $1,000 left and expect to be $50,000. But they're going to leave you alone for the most part. All they want to make sure is that you don't run out of risk money and leave them. Other than that, you're on your own. If you want to lose all your money in 2 days, that's up to you. Okay? Thank you, Jim. No typing. Thank you, Matt. All right. We'll call it a night, 5 minutes early, 6 minutes early. So if you're in the room, I'll see you tomorrow. If you're not, I'll see you at the next event. I think we're probably getting together next Monday, I think. But check the calendar for the biweekly scanning. All right. See you next time, everybody.